investment in flips, right? It's good to, generate cash today, but not so good for future wealth building. And had some, duplexes and some holds. And Mike and I had, I think the largest we had earlier on was a fourplex, and it's good, and those are good. It's just they don't scale. It's harder to scale, so it's from the scaling standpoint, it is.
Sorry.
Oops, no problem. So the shift into why I personally liked multifamily was kind of going back to even my previous career, it's building businesses and helping companies grow. And I saw that multifamily, because of its commercial characteristics, it's all about revenue. It's all about our net operating income primarily. And so the multiplicative effect of that was super appealing to me. And it really is like turning your business around. At least our model is, buying apartment buildings that are not performing so well financially, perhaps physically, and turning them around for profit. So seem to be have more control over the value of the business versus other strategies. And again, not that, I think, Mike and I talk about it a lot too, is there's no wrong strategy, right? There's a strategy for everybody. Right now, multifamily is kind of good for where we're at right now.
That's interesting. I like that. And I like your comment about there is no wrong strategy. It's really about, you're the architect of your future. What do you want your future to look like? So it's important to choose the strategy that makes a lot of sense for the future that you want to create, right?
Yeah, absolutely.
For sure. Mike, did you have anything you wanted to add to that? Because I know you guys, you're partners together, but you also do some things individually, don't you?
Yeah, I'm not part of like the flipping side. That's where Mark started. Not that I started investing in duplexes, long-term buy and holds, never really got into the BRRRR. I think it is a good way to recycle money the fastest. You could probably do it in 6 months, where in apartment buildings, when we're buying value add, we're essentially BRRRing that building. Just sometimes it takes between 2 to 4 years, depending on the project, right? It's more of a long-term hold, I would say, or a longer term BRRRR. I don't know. I originally had a negative kind of view on BRRRing and flipping. To me, it wasn't really investing. It was kind of creating a job, right? Yep. And I had a job for many years. I actually became an agent about 4.5 years ago and left my career. For those of you who don't know, I was a licensed plumber, and I got up to about 45 units while I was still working. But managed to support myself and say I don't need to do that. So I got into these longer term kind of bursts through the apartment building space. And I surrounded myself with people in that apartment building space because my vision was to get to 200, 300, 400 units. And I was looking at the duplexes or single family homes and saying, this is going to take me forever to get up to hundreds of units. So how can I scale faster? So I kind of moved full-fledged, I think in 2014, into the multifamily side of things and never looked back from there.
That's awesome. Now, a lot of people, as they start looking at getting into apartment buildings, they really, they get to the point where they sort of max out or cap out on mortgages, and then they start looking at partners. Obviously, you guys are business partners. What made you decide to work together? What is it about your partnership that works to the point where you want to keep growing your assets together, your portfolio together? You want to start with that one, Mike?
Yeah, I mean, I think I realized early on that, one of my weaknesses was actually building that brand. I didn't have any of that brand recognition, the whole marketing aspect behind, which I think when people get into real estate investing, they don't even see that as a part of the business. Right? They're just going off buying properties, but kind of creating that brand, strategizing, that whole background of even like putting our podcast together to get out there, to get known. I had no clue how to do any of that, where Mark brought, a wealth of knowledge on that side. And then going back to even capital raising, right? Just with that brand, people know who you are, they know what you're doing, and get interested in that project that you're doing or that business that you're doing, where I was more full-fledged in kind of doing it. I had a previous partner and we would go off and just kind of run it like a real mom and pop, right? You'd go off there through friends and family, partner together, built a sizable portfolio that way, but kind of realized, hey, I need somebody else to actually take this to the next level, because, you know, recognizing your weaknesses is a strength. At least I see it that way, because you're able to, you know, find that partner that brings the side of things that you don't necessarily have.
Absolutely. So it sounds like it's really a good balance between strengths and weaknesses for the two of you. How about you, Mark? What made you decide that Mike was a good guy to partner with and you know, build your vision for the future together?
Yeah, so I think just building on what Mike said, you know, Mike had more experience in real estate investing than I did. Like he said, he started kind of early and built up, you know, a good sizable portfolio while working on his own. So that was good. So again, I learned from Mike in that regard. And I think just in terms of partnership, and it's my experience in my previous partnerships have been, you know, if you look at kind of the business as a whole, you know, we each have to wear different hats, right? If we're skilled in wearing the same hats, it's going to be harder to scale the business, right? It can be done, but just more, you know, difficult. And as Mike said, like I enjoy things related to marketing and scaling and operate, and like just kind of the business side of things. And we overlap in some of those areas. But Mike's really good at, you know, connecting with other, you know, realtors and deal sourcing and, you know, the operation side of real estate investing. And so, you know, when we look at kind of the business side of things, those are two big functions, right? And so for me, it's comforting knowing that, okay, one part of the business is being taken care of, right? And of course we're in it and we overlap a bunch of times too, but I have confidence that, you know, there's other parts, like, you know, deal sourcing is happening and operations are happening. And Mike is comforted that, you know, capital is coming in, or branding, the marketing side is happening. So, and we both enjoy, I think, those sides of the business. And I think that's important in any partnership. The other thing too, is I think it's important as people look to partner with someone else, and not even just capital partner, but real business partnership, that you have to be able to have good debates, right? And not take things personally. And Mike and I have really good debates, right? Like we're like, you know, we're passionate about our views, and I'll share my view, he'll share his, and we'll debate it. And that's super important. And I think if you can't do that and feel comfortable doing that, it's going to get tougher, right? So I think our personalities are such that we like a good debate, a good challenge. And sometimes we're wrong, sometimes we're right. It doesn't really matter. At the end of the day, we have kind of we want to improve the portfolio, improve financials. We want to, you know, do what's right for our investor partners, where we have partners on our deals. And so it's kind of egos aside, let's just kind of get things going. And so I think that's important when looking at partnerships, is that you can have really good debates in tough times. And I think we do that.
Yeah, I think that's huge. I think that's a really good insight to have too, because I think particularly in this day and age, I'm finding more and more, especially in social media, people are very polarized, you know, and if it's if you don't agree with me, then we can't be friends, and, you know, we can't work together, and like everybody must be on the same page. And the idea of having this difference of opinion, but being able to find a way to work together, I think is somewhat unique right now in the way that the world is working. So I think that's a huge thing. And certainly I know when I'm choosing my partners, I like to have the balance. You know, I like to make sure that it's not that we have the same personality type and we view the world the same way and we're both good at the same things, because like you said, that leaves this whole other area over here that's not being covered. And in particular, I think it's really important to have someone in a partnership who's super strong with numbers, you know, great with Excel, you know, really good. Like the way I test is I like to do mental questions. Like I'll ask my husband, he's an engineer, and I'm like, okay, so what is this? And if he can do the mental arithmetic, then he's the right fit for me, because I wouldn't do it if my life depended on it, because it wouldn't be right. But when it comes to the people side, that's my strength. And I think that balance is really key to building a successful long-term partnership. And I love that you guys are able to sort of look at that and have that difference of opinion and still be able to figure out ways to work together. I think that's awesome. So how are you deciding, or who is deciding, might be a good question too.
I just want to point something out. One of the questions.
I think we might be having issues with Mike's internet. Are you seeing that?
Go ahead, Elizabeth.
Sorry, Mike, can you try that again? I think your internet might be a little glitchy.
Yeah, Mike's frozen.
Well, maybe he'll come back on in a minute. Why don't you take that one, Mark, then, about who is deciding which markets and what are the criteria or the evaluations that you're running to determine a good market to be in?
Sure. Yeah. So we're both kind of, you know, it's a pretty major decision. So we're both. So right now we're in Barrie and Hamilton primarily with our apartment buildings, and so definitely continue to look there. The market is hot. There's a lot of competition. There's a lot of, you know, there's a lot of capital flowing into the asset class. And so, you know, that creates a bunch of competition, right? So we are looking in other markets. And so we collectively decide on which markets we should look at. And it's based on, you know, I'm still a RAIN member. So kind of the RAIN and Don Campbell philosophy, right? You know, go into markets that have good economic fundamentals. So that's our first thing. Does it have population today? Is it going to continue to grow? And, you know, a bunch of other factors, you know, economics, GDP and such. So first and foremost, that's what we look at. And then, you know, is it at a distance from our current operations today that, you know, our trades can go there, or the company doing our renovations can go there? We're just in the process of hiring someone internally to manage properties internally. So can they go there? So location is a factor, but economics is kind of the fundamental piece of the puzzle. So we have, you know, we're looking in other markets than the ones we are today, just again to be able to just source more deals, because that seems to be the challenge right now for us, anyways.
Absolutely. So you're active in two markets that a lot of people are saying like they've already peaked, they're way too expensive. You know, Hamilton, I mean, there's people going, well, Hamilton peaked 10 years ago. You can't find anything with cash flow unless you're doing like a Burr duplex. So how are you guys finding cash flow in these markets where people are like, no, it's done. There's nothing more. There's no more deals to be found here. Do you want to take that one, Mike?
I can. I just don't want to be too choppy here, so hopefully you guys can hear me clear.
Yeah, we can. You're good.
Everything's pretty clear?
Yeah.
Perfect. We're actually not finding cash flow in Hamilton. We're looking more at a value add strategy, so things that are really, really depreciated. And the cap rates are really low. Right? But when we're analyzing deals, we're looking at today's value. What is it worth from a lender's point of view? What do we think it's worth? Kind of figuring out how much capital we need to acquire that. And then once it's transitioned, looking at an end value, right? Once the building's up to top market rents, it's been renovated, and kind of saying, okay, I'm X amount of dollars in out of my pocket, and it's going to make X amount of dollars, and kind of gauge our return on investment. So yeah, we're negative cash flow, definitely. Right. And that's just the markets we're in. And it's probably, I would say, since day one buying apartment buildings, everything I've bought has been very close to negative, maybe slightly positive. But the outlook, I think, for us is in 5 years from now, what is that cash flow going to look like? Versus if I bought in a market that has a higher cap rate and bringing me cash flow today, what will my cash flow look like in 5 years? And a lot of times when you look at those Hamilton market, cash flow is going to be a lot higher than, say, Kirkland Lake, right? Maybe right not today. So this is why, you know, even in our course, we teach what is our why. Are you buying for cash flow today? Do you want to retire in 2 years? Do you want to retire in 10 years? What do you really want? What are you really doing this for? And what do you need? And then kind of finding a market that suits those needs. So yeah, Hamilton is definitely negative. We're looking at a building right now that's like negative $7,000 a month. And it's like, are we going, you know, way overpaying here? Are we going in over our head? It's really negative, but you end up looking at the ROI on it, and it's probably over a 10-year period will be the, right? So you kind of have to weigh out that balance and see what works. But if we're looking from a cash flow perspective today, yeah, I would say Hamilton's probably not the market.
Absolutely. So how are you how are you buffering like a $7,000 negative cash flow? Where does the capital come from? Does it come from your capital partners, and they kind of put in, let's say, $7,000 a month times 12 months? So do they put X amount in a bank account to buffer this negative cash flow?
Yeah. So on deals where we have capital partners, like this one, we're probably going to buy personally, but the same idea applies. We just have to know that that's coming, right? We got to know that we got to fund this account for the next 18 to 24 months. And if it's in the capital raise, then yeah, you have to raise to account for that, or kind of buying it personally. Then we'll just have to know that that's part of the equation. So, and like Mike said, you know, for this market, we're not really buying for cash flow today. We're buying for cash flow in, you know, it will absolutely cash flow in 18 or 24 months, and it'll cash flow really well. But just today, it's not going to. So you just have, you know, cash flow planning. And as long as the capital that goes in, you know, today generates an ROI, a strong ROI over the course of the strategy of the plan, then it's good. At least, you know, for us. Now we're closing on a building on Monday or Tuesday. That one right off the bat is cash flowing, right? So that one's in Barrie. It's probably the closest to turnkey we've ever bought. Great location. It's, you know, doing great numbers right away. So that one's kind of a, you know, I'd say a safer bet. The ROI reflects that. I think on the, let's call it the riskier investments, riskier buildings where it is negative cash flow, the ROI typically has to be better for it to make sense. So.
Mm-hmm. So how are you finding your deals, whether they're cash flowing or not? Are you guys working from MLS as well? Or have you guys set up a network? Do you have people feeding you opportunities? You know, where can other investors be looking as well to potentially find some of these deals that do cash flow? Because most investors, you know, they're either looking for long-term, you know, in the future for retirement, or there's a ton of people right now who are like, I want to leave my job. I need the cash flow. So how do I buy a building in a market where I've got cash flow?
Yeah, so sourcing deals is very difficult, and I think it takes a lot of time from the beginning. And I see people coming from, you know, the residential side moving into multifamily, thinking like a deal is going to pop up every few months or so or sooner. It doesn't happen that way. I've probably spent a good 4 years really networking with brokers in the space, building owners in the space, attending events that, you know, I think building owners will go to, whether it's apartment association meetings, things like that. But one of the major things is when you're dealing with a reputable broker that has like an exclusive listing. So whether it's through like Colliers International, Avis and Young, CBRE, they do have a lot of, you know, apartment buildings that they list, but exclusively, right? They want to know who you are, what you've done, can you close? So when they typically get a deal, and I've seen this multiple times, this is one of the reasons we got access to this Barrie deal. I was doing a bigger deal for a client, and they only wanted to go out. The sellers only wanted to go out to a handful of people that the broker knew could close, right? So I got access to that because I do help out some of the larger investors in the space. So then we got talking, something came up. I said, that's probably too small for my client. That's something I'll take a look at. They knew we had a reputation because, you know, things we've done in the past with this broker. So we got access to it, right? And there's a lot of stuff that, like, there was a whole other portfolio of 4 or 5 buildings that came out. And because we happened to buy that building, it came to us first. Do you guys want it? They were happy with the way it worked out. The offer was clean. Do you guys want to take a look at it prior to anybody, right? And another thing that a lot of brokers do, which is difficult for newer people, is say you have a listing. One of the bigger brokers has a listing on 123 Main Street. They're going to call other people who have bought buildings that size in and around that location, because those are the people who are going to have that economies of scale. If you got 2, 3, 4 buildings on that street, so they're willing to pay slightly more typically, right? So what I've had calls from people who said, hey, I seen you bought, you know, 123 Main Street. We have this coming up. Is this something that would interest you? they see the price we paid, whether it's through Realtor or whatnot. And it's just building these relationships, right? It's the same with direct to seller, right? Me and Mark went out, about a year before, the summer before COVID hit. And we walked through a building. The guy says, I'm not looking to sell. I followed up with him, every 3 or 4 months. The last 6 months, I didn't even get a response, right? The other day, I'm talking to Mark, who calls through. That building owner says, hey, do you remember me? I think I'm looking to sell now.
Wow.
Right? It takes time. It's 2 years. But when you look back on building a portfolio, right, you have one of those 15 to 20 units come up every couple of years. You find one through somebody else that you've been networking with, and you're buying 35, 40 units a year. You look back 10, 12, 15 years from now, you say, wow, I have an 800 unit portfolio. And most of the investors in this space that have portfolios that size, they didn't do it in 3 years or 4 years. It's a very kind of slow pace. Sometimes you will go 8, 9 months without finding a deal, but it's having that consistency, whether you're going, direct to seller through, mailers and things like that, whether it's, calling building owners in the space, calling brokers in the space. The thing is they want to know you can close. And we've talked about this lots, that it's a very small space. Everybody seems to know everybody. I talked to one person, like, oh, I know the guy who bought that building 12 years ago, right? So if you have a reputation where you didn't close on a deal, or you exhausted your due diligence period and said, this isn't for me, the next deal that comes up with people who know that broker or seller, they're going to say, oh, don't deal with that guy. He wasted my time. Yeah, right. So you got to be very careful as to, how you're approaching things. And we talk about transparency, right? There's deals that we're kind of on the fence about, probably can't make it happen. Right away, I pick up the phone and say, listen, put it out to whoever you want. I don't think we're ready for this deal. And then if we are, in a week later, I'll pick up the phone and say, hey, we changed our mind. Is it still available? But I don't want to hold anybody back, because that's how you start killing relationships. Right. So I would say one of the major things is just consistency. Stay consistent with your marketing, be very transparent. And over time, people are going to know you put an offer on this building, didn't work out. You put an offer on that building, it didn't work out. The other thing I want to point out is, if you're not actively looking at buildings and looking at the numbers, you don't really know if it's a good deal. Right. Because you can see price per door. You can see, what it's sold for. But from a cap rate perspective, you don't get that information. So if you weren't actively looking at that property and receiving a rent roll, you have 2 similar buildings. One sells at a 4 cap, one sells at a 3 cap. They're different prices. Which one's the better buy? How do you determine that, right?
So can you expand on that a little bit? Like, how do you use cap rates to determine, like, so if you look at a building and, like you said, one has a 3 and one has a 4, what are the assumptions, or how would you look at? Because cap rate is something that can be very confusing for investors who are starting out, especially in the multi-unit space, to go from, the comps say that the house is worth this. Now all of a sudden we're talking cap rates. Like, can you explain that for us?
Yeah. So a cap rate is your income minus your expenses before your mortgage, and then you divide it by the cap rate to get the purchase price. So your net operating income, so all your income minus your expenses is your net operating income divided by a cap rate or purchase price to get your cap rate. Mark will explain the little triangle he likes to use, but so let me explain this. If you have a building, a 20-unit building, and a 20-unit building sold for $4 million, it was totally turnkey in the Hamilton market that we're in. That building, totally turnkey, is probably going to sell at a 4.25 cap rate, because there's no upside potential, right? You're buying it at a higher cap rate, probably going to cash flow slightly, and it's all good. But if you're buying that same 20-unit building right next door, virtually the same building, and the rents are half, how can you pay that much money for it, right? That cap rate's going to be a lot lower. Now, when the cap rate's lower, the bank is going to lend you less money, because they're going to say, yes, that one sold for $5 million. Yours is only worth $3 million. We're only going to lend you 2.5, right? But once again, the way we value is we look at it today. So I'm looking at that $3 million building. I'm saying, okay, how much is the lender going to lend to me? How much capital do I need to put in? And then once it's fully transitioned and I'm getting top market rents, what is my sale price at that sale cap rate? So for example, I'll try and explain this a little clearer. Buying a building for $3 million, it costs you $1 million to purchase it. So you're saying, oh, I need a 33% down payment plus closing costs. I'm 40% in. This doesn't make sense at all. But now when you're looking at that $1 million or $3 million building, saying the end value is $5 million, right? You got $2 million profit on a $1 million investment. It's 200%. And if you think you can do that in a 3, 4, 5, 6 year period, that's how you come up with your ROI, right? So it's kind of determining, how much money you need and what your end value is going to be. Because a lot of times, like the building we're looking at right now, if we talked cap rates on it, people would think we're insane because it's sub 3%. And it's like, how can you afford to buy that? But when you look from a price per door standpoint, it's cheap.
That's interesting. So your whole perspective when you buy apartment buildings, it's like a complete mental reboot from when you shift from buying residential into buying commercial.
It is. It's value. It's not really based off of comparables, right? When you're buying residential, it's, that house was on the market, it sold for this amount, right? When you're buying commercial, and what's happening now, what's really like a whole mind craze is that what the lenders are valuing things for and what things they're selling on the market are two totally different cap rates. And then you have some private lenders willing to lend you, a certain LTV based off of the appraised value. And you have a conventional just underwriting at, a cap rate that they think is market cap. So it's like you can go private and literally get 15 or 20% more, right? Leverage, right? You pay a little more, but when you kind of work it through your analyzers, you see that, oh, my ROI is literally doubled. If I had to analyze this conventionally, this deal would never work, right? So go ahead.
I was just gonna say, that's so interesting. So you're changing your perspective, and that's absolutely true in terms of looking at how the building is valued. And it's funny because traditional lenders, when you're a good negotiator, when you find a great deal, when you work really hard to leverage your relationships and put something, a really strong opportunity together, lenders literally don't care. They're like, this is what you paid, so we're only giving you, 80% of your purchase price. It doesn't matter that the actual fair market value of the property is much, much higher.
Yeah, I think that's generally true. We've been able to partner with certain lenders that know the strategy, so they understand that, okay, yeah, you guys are buying it at kind of at a higher price, lower cap rate, for example, but we know that within 18 to 24 months, it's going to be a different asset. It's generating more revenue. I see they align with our vision. They've seen it before. And so there's certain lenders that specialize in the value add, strategy, right? And they just know what to look for. They know how to underwrite and such. And so, you want to work with lenders like that because you're going to get a little bit more, a higher LTV to begin with, which in the end boosts your ROI. So, I mean, for us, the cap rate question is a very interesting one because you get it a lot. Like, oh, what is the cap rate? What are you buying? What's the cap rate? And I think cap rate is one element of the puzzle. There's so many other things to consider. For us, ROI is really the more important kind of number. Buying at a lower cap rate, you're going to need to come up with more money and such like that, which is fine. As long as our ROI is strong, then that's really the main indicator for us.
Yeah, the ROI is what makes it, what helps you determine whether this investment is worth your while, no matter what the cap rate is.
Right.
I was actually at the apartment building conference a year or so before COVID hit. And one of the bigger players, one of the bigger REITs had someone on the panel. And the question that was posed is, what is a cap rate? Like if a market's trading at a 5 cap, is that for a turnkey building? Is that for a value add building? Is that for something that needs some construction? Like, what does it mean? Like, that's how we started his presentation. And it kind of stuck with me like, yeah, I guess it's only one indicator. What is it? Like, you can't say a market's trading. Oh yeah, that market's at a 5 cap. Well, for what? For what building? Like, what does that even mean? Right. So there's a lot more that goes into, valuing a building, and that's just one indicator.
Absolutely. And I just want to go back and highlight, for the people who are joining us right now, one of the things that we sort of, we touched on briefly, and I want to circle back, is the importance of adding value to your relationships, the importance of having integrity, the importance of protecting your reputation, and the ability that that gives you to generate future business. You know, you have no idea who people know within a town. And you want to be careful that you are being respectful and professional and, you know, building quality relationships everywhere you go, because you literally have no idea where, you know, the receptionist in one realtor's office is actually married to, you know, the number one electrician in the area, and you were super rude to her, and now he won't do anything on your building. So yeah. I really like that you touched on that, Mike. I think the integrity that we, you know, approach all of our relationships with is really important, because I think it helps us bring more deals into our portfolio for sure.
Yeah,
absolutely. Yeah, and I just wanted to touch. Go ahead.
It's such a small world. Like, it's so. I mean, think about the number of single family homes in the province, just to say, versus buildings. Just that kind of scale down will tell you how, you know, small the world really, or small the industry really is. Maybe a lot of capital in it, but from a personnel standpoint, there's, you know, 10 times fewer people to deal with in commercial residential than there is, you know, residential.
Absolutely. So you burn a bridge with one, and you run the risk that, you know, that you've taken a lot of deals out of faith for yourself.
Totally, 100%.
So it sounds like in terms of, because one of the questions was, what steps are you taking to ensure your offer is accepted? So it sounds like you're building high quality relationships. You're proving that you can close and you can be trusted, and you're following through on your commitments so that lenders can see that when you say, this is our business case study, this is what we plan for this building, you're actually following through and completing that. So that sounds like some of your key things to getting offers accepted is building this reputation that you're dependable and can be counted on.
Yeah, like for people out there working with, you know, properties that are listed with these smaller boutique brokerages, you know, the actual listing broker has a reputation with their client. And you don't know what's said between a listing agent and their client. But a lot of times, you know, I would say above the 20 unit space, that money is not the be all end all. People want to make sure that you can close. They're telling their client, I'm bringing reputable buyers to the table. So if you don't close with that broker is essentially ruining his reputation with his client, because he's promising them that I'm bringing reputable buyers. So anything that broker ever gets, he's going to say, nope, not working with that guy. That guy didn't close. I lost a client, right? So it goes a lot further, and people don't necessarily think about that. Is like the other agent on the other side, what is their relationship with their client, right? And we've actually purchased a building. I heard it was under what the other offers were. Solely for the purpose of, oh, I heard that guy didn't close on his last deal. I have a good relationship with this guy, with my seller. I can't afford to accept their offer based off what I've heard and seen in the last deal. So we're gonna work with you, right? Another thing I wanted to point out about getting your offer accepted is if, like, conditional periods. Everyone pushes back on conditional periods, and they want to know you're experienced. And we get this a lot from some of the bigger brokerages, where they send out a package. They have all utility bills. They have phase ones done, building condition assessments done. Everything's in the package. What are you going conditional on? Financing. That would be the only thing that you're going conditional on. But if you're an experienced buyer and you have all the numbers, you should roughly know within $100,000 or so what kind of mortgage you're going to get. Now, if you're not an experienced buyer, you're going to put a 20 business day conditional period. But the agent's not going to want that. They're going to say, for what? So a lot of times in those cases, we'll go firm, because even if we're off 100 grand, it isn't going to make or break the deal. But that's something you have to decide. But now they're looking at a firm deal versus conditional offers, right? And a lot of times, you know, sellers like firm deals, right? There's other things you can put in if you're that confident, like non-refundable deposits. Like if you know you're going to close, or you do have a really short conditional period and they won't do an extension, maybe consider leaving $100,000 non-refundable deposit to say, no, I'm serious. I just do need extra time, and in 2 weeks we'll have it done. If we don't, for whatever reason, there's your money, right? So you're kind of putting your money where your mouth is. right? But people like that. They'll accept that offer, you know, over a conditional offer that might be slightly higher with some nuances in there that they don't want to deal with. And sometimes having those nitty-gritty causes like the seller agrees to fix this and fix that, it's really, you're just going to upset an experienced seller for $10,000 worth of stuff. Is that really going to kill the deal? And I've seen a lot of people lose deals over that, right? So it's something you have to think of, right? And I'm an agent on the other side. So like, I want to protect my clients and tell them, yeah, you should put this in, you should put this, you know, this clause to protect yourself. But in a lot of cases, if I put that in, my offer is going to get tossed in the garbage, right?
Yeah.
So you gotta make a decision. But that, I mean, that comes with experience as well. But that's typically the main things we use to get our offers accepted.
That's awesome. That's great. Thanks. Those are absolutely great tips. Mark, did you have anything you wanted to add, or can I ask you about your property management setup?
Yeah, we can get into property management. Yep.
Sure. So tell me a little bit about how you guys are handling property management, because you've identified two specific markets. So are you hiring local property managers? You mentioned earlier that you're hiring someone on staff. Does that mean you guys are self-managing for the units you have right now?
It's a mix. So right now in Barrie, we have a property management company that's managing our buildings there. And in Hamilton, we are doing it on our own. A lot of them there are in the midst of major transition, and so we're pretty much we're pretty hands-on with that regard. So what we're going to do is we're going to bring property management in-house, and so we're just kind of writing up the job description right now. So if anyone's watching and they're interested in kind of working with a fast-growing investment firm, property management looking for experience. So we're going to bring that in-house to manage all of those, all of the properties now in-house, so that we're not outsourcing one building here, kind of, So, we'll step back a little bit from the day-to-day, and our plan, our hope is that, the person that we bring on is going to take on more of the day-to-day management of the properties, even coordination with contractors. So that we, can continue doing what we're doing, which is, capital and deals. So we're literally in the process of doing that right now.
That's awesome. Okay, so, and I love that you're doing a mix. So you sort of get to see the best of both worlds, working with a property manager, but also self-managing. What made you decide to choose that particular property manager? Because obviously in Barrie, there's a few different companies out there. Obviously, you probably chatted to most of the bigger ones. What made you choose that particular property manager over the other ones?
So this one, so one of our partners in the deal had really good experience with this property management company, has a few of his properties kind of under management with them. They've been great. Like, they've been really good. You know what, like, it's, I'd say no complaints. It's been over a year with them, but now from a business standpoint, it just makes sense, kind of given, that we're scaling the portfolio, to bring it in-house and do it that way. So again, it's not really, at least for that market, wasn't something that, they did wrong, or, doing a great job. But again, we're trying to vertically integrate a little bit more, and that would be step one in our vertical integration, right? So it's kind of, let's take property management, instead of kind of bring it out, it brings more revenue into the company, and so we're at the scale we can consolidate now.
That's awesome. Okay, so I'm going to leave the last one and use that as our wrap up. So we actually have 10 people here who put questions into the Q&A box. So we're going to hop over there and start answering questions that people have. So just a reminder, I know there's a few people who've joined us later. Two things to be aware of in the chat box. Totally encourage discussion and communication with, the presenters and the speakers. Just make sure you click the drop down and change it from all panelists to all panelists and attendees. And if you have questions that pertain to the material today for the presenters, please go into the Q&A box so that it doesn't get lost in the chat box. All right, so our very first question is for Mike. How are you coordinating your realtor role with that of a real estate investor in terms of time management, property management, and compliance with the authorities? That's an interesting one. I like that one.
It's tough. I'm pretty transparent with new clients coming in. I let them know that I'm buying in the space as well. I do come across other properties, but I let them know I'm their competition, because primarily our investment company is my main focus, right? So if we're not able to buy, I do come across other properties, I'm willing to pass those off. But for the most part, it's all done through transparency. I let people know, here's what I buy. We're actively looking. Honesty. It is what it is, right? A lot of people come to me and they say, listen, I've heard your podcast. I like what you do. I want you to work with me. And I'm like, well, I gauge what they're looking for. And just so everybody knows on here, I don't suggest you work with one agent. That's one thing I've never done, one particular agent, whether they're forcing you to sign a BRA or not sign a BRA.
Sorry, can you just back up tell people what a BRA is?
A buyer representation agreement. So now you're bound to that agent. If you do go off and buy something, they're technically, exposed to commission on that. So you would have to pay them out. Now, depends on the relationship. If that ever happened to me and something was signed, although I don't get clients to sign those, a lot of agents do, and they'd probably kill me for saying something like that. But I come from the investment side. A lot of, bigger brokers in my office tell me, well, actually, they don't say too much because I do have some bigger clients. And you almost have to choose your clients, because my clients are in a space that I'm not, and I work directly with them, a couple of bigger clients. So if I wanted to buy in that space, then it would get really tricky, because now I'd have to go to them and I wouldn't kind of be their in-house kind of rep, and I could tarnish that relationship. So I have to kind of work out, okay, is the money I'm making from the commission from them worth tarnishing, because now I need to buy in that space? And I'm sure there's going to be a point in time where, yeah, we do start overlapping and there is conflict, right? But for right now, to answer that is, people who call me, I'm open and honest and say, I'm buying in that space. If there's something I come across that I'm not interested in, I could pass on. I do have other people that, I've already let know that I would pass them on deals as I come across them. So it might be some time before you get them, but I will take down their information, what they need. Kind of, we have a buyer's list. And as I come across stuff, I'm willing to shoot that off, right? And if they need help to negotiate the deal or whatnot, I'm there. And then I can start working as their agent.
Awesome. So as an agent, do you go, because I know there are some companies out there where the agents act as coaches as well. And I know you guys do coaching. Is that combined with what you do, or is your coaching program separate from your activities as a realtor?
No, coaching programs more from the investment side. So if people need help analyzing a deal, buying a deal, managing a deal, we have coaching programs. Not so much from the agent side. That I don't really do. I've had people reach out to me and ask me. So I'm starting to consider it. But at the end of the day, like for me to do coaching, I'm coaching from the investment side. I have my investment company, I have the realtor side. There's so many places I can be, right? So it's very tough, and that's kind of been on the back burner. But it just goes back to the same way as actually finding deals is, being consistent, being transparent, working hard, and trying to find those, relationships of building owners, buyers, right? I don't want to say it's easy because it sounds hard, but it takes time. But that's what you have to do, right? We have our Facebook group. I mean, you just jump in there. Is there any, meetup groups of apartment buildings, private Zoom meetings? I'd love to learn more. You join one of those, maybe there's 5, 6, 7 people in there that you find out own apartment buildings. And it's the same thing from the agent side of things, right? I know someone looking to purchase in that area. If you ever think about selling, and it's just, building the relationships, working hard, staying consistent.
Yeah. And I think it's important too. One of the things I think makes investors successful is being focused. And you guys seem to have sort of the same steps in your process that I do, which is where you decide on your strategy, then you find your market, and then you start raising deals. I find that when investors struggle a lot, especially when they're starting out, it's when they're all over the place and they're like, I'll buy anywhere in Ontario. And then they're only looking at MLS, or they're only looking at, 1 or 2 wholesalers, as opposed to picking an area to focus on and putting their time and energy into that focus and building those relationships so that the deals come to you organically.
Mm-hmm. Yeah, and you know what, I can empathize with people when deals aren't coming, right? Like literally 3 weeks ago, maybe 4 weeks ago, like Mike and I were like, holy, there's no deals. Like, what are we going to do? How are we going to buy more? Like, this is crazy. What are we going to do? Kind of like almost freaking out a little bit. But literally 2 weeks after that, there was like 5 deals on our table that were, you know, stuff that we were really seriously considering. And then we had, you know, the opportunity to pick and choose. And now a new deal has popped up now too. So I think there is a little bit of patience required, right? You know, I think you mentioned it, Elizabeth, as well, is design your life. Like where do you need to be in 5 years? And maybe it's just one building. It doesn't have to be 10 buildings over the next 5 years. It could be one forever. Like, I mean, but I think, you know, we all go through, at least we are anyway, periods where it's like, oh, is this even working? Like, why are we getting no deals? Are we doing the right thing?
Yeah.
Like, should we be talking to different people? Oh my God, maybe it's not working. But then, you know, that's just the role of entrepreneurship. You're just kind of up and down, right? Or the reality of entrepreneurship. But I think consistency really matters. Like, I think even when things don't seem like they're happening, keep doing the things that you set out to do. And then eventually it will, especially, you know, in this space where there are way fewer deals than in single family. And if you're coming over from single family and used to lots of deal flow and kind of, you know, emails from wholesalers, like 10 a day, it's a little bit different. But I think, you know, we experience the same thing, the ebbs and flows.
Absolutely. And I think it's important that, you know, guys with your level of influence and your profile acknowledge that, you know, it doesn't mean you're doing something wrong. I remember those feelings too, you know, when we were starting out, especially when, you know, we had invested a significant amount of money in our education, and we were going like, what are we doing wrong? Why can't we find anything? You know, we have all this criteria. You know, when we didn't know anything, we could find deals all over the place. And now that we know what we're doing, all of a sudden we can't find a deal. And I think it's really important, the idea of having standards. Like, you know, when you don't know any better, everything looks like an opportunity. But when you're like, no, an opportunity looks like, you know, it meets A, B, and C criteria, then all of a sudden it's not a spray and pray approach. It's this is what I'm laser focused on finding. And there's almost a lag time where after your education, you're establishing your networks, and then the opportunities start to come, for sure.
Yeah. And I do think people going out there need clarity. And I get these messages. I know Mark gets these messages too. I'm looking for buildings where in Ontario, 6 to 50 units. It's like, what does that mean? We don't take that serious. We're busy. But if someone were to come and say, you know, I'm sitting on $1 million capital, I'm looking for something between 12 and 20 units in, you know, the southeast end of Hamilton, time frame 6 months. If you guys come across something, you know, send it my way. I'm going to be way more opposed to give that guy a call back, figure a little bit more information than someone that sends me an email saying I'm looking all across Ontario. So I think to stay focused, you need some sort of clarity and kind of need to speak a little bit of the language, right? You don't want to say I have $1 million, I want to buy a 60-unit building, which we do see. You know, I have a few $100,000, I want to buy a 20-unit building. Well, not in Hamilton, you're not, right? So,
Absolutely.
well, this is what I'm saying. It's hard, especially with me being busy. It's hard to now coach that client through and take them through. I'd rather work with someone who is looking, that has experience, bought apartment buildings before, know what they're doing. So I'm not necessarily holding their hand the whole way through. Right. So that's why clarity, when someone's clear, it goes a long way, right? Just for everybody, your lawyers, your accountants, everybody, they'll want to work with someone that's growing and pretty clear and concise.
Yeah. And I think sometimes you get what you pay for too. Like, I know there's a lot of clients out there, like I do discovery calls. I usually do, you know, 5 or 6 a week. And some people are like, well, why would I hire a coach when I could just go to a realtor and have the realtor teach me? And the way I look at it is the experience is completely different. Like, as a coach, I have no vested interest in you buying any particular property. My job is to help you develop the skills, the knowledge, the network, and to prepare to buy the right property for you, not any property that I have available. Yeah, and I think that's really important to understand the roles of the different people on your team as well, right?
Yeah,
it's key.
Yeah.
It's funny you said that, because me and Mark always have this conversation. If we're going to coach people how to buy apartment buildings, and now I have to become their agent as well, it's like all the pressure's on me. I got to babysit them. I got to find that right property on top of coaching them. It's like that. This isn't for me. That's a lot. Like, I'm either going to coach you, show you how to do it, and you're going to go off and do it. But I ain't going to coach you and then find the properties for you, kind of show you how to like that's, I'm holding your hand all the way through. I would never have enough time in the world to take on a handful of clients.
And I think too, and I had this conversation with a broker last week, and I said, you know, does your errors and omissions insurance protect you and your client when you are providing investment advice? And they're like, well, no, it doesn't. And I said, so you're now coaching and you're being a realtor. You've only got one income stream, and there's no protection for you or your client if you overstepped your bounds or taught them or told them something that maybe got proven either incorrect or didn't apply in that situation. So you're actually taking a lot of risk, and so is your client by doing that.
Yeah.
So I really have a very firm belief in, you know, choose your people on your power team wisely, and don't be cheap about it. Don't, always you go to your lawyer, well, I'm going to bring you 2 deals this year, so I want you to give me, 50% of your rate. When people are at the top of their game and they're giving you their full attention and their full support, they are absolutely worth investing in, to have the right people on your team and in your network, for sure.
You get what you pay for.
You pay peanuts, you get monkeys.
That's right. That's good. I like that extension.
Okay, so we have more than a dozen questions here. So do you think we can laser focus a little bit for the next kind of 20 minutes and try and pick through and give people some real high value content here?
Yep.
All right, so Nav asked Mark, Mike, couple of questions. How are you finding partners? Are you renovating your multifamily properties as well? Which clearly, Mark, you're standing in one of them undergoing renovation. So I think the answer is yes. And if so, how does renovating the bigger buildings differ from renovating smaller buildings with 1 to 4 units?
Sure, I'll try to attack that. So how are you finding partners to work with? So I'll assume capital partners. So I think, again, friends, family, accredited investors, we do get a good reach out given kind of the platforms that we're on, podcasts, webinars such as like this are super helpful, and just kind of, we're sharing content all the time. So if you follow any of our stuff, we're talking about what we're doing, kind of no holds barred. Here's what we're doing. If you like it, cool. If not, cool too. So that's kind of, that's how we're getting a lot of partners that way. From a renovation standpoint, so we personally don't do it. So I'm standing in a unit that's almost renovated 90% in flip-flops. We wouldn't be able to scale I'm just not even technically proficient. So it would really look really crappy if I did this, and take a long time. But we do have a company that specializes in apartment buildings. They do a lot of work for us. I think we have I don't know how many units we have now. We have like 15 or 16 units under renovation right now. So that's super. So I think you're going to scale. You want to do that. I mean, some people have scaled and vertically integrated with construction companies. That could be an option at some point as well. And then what was the other question? There was another question. Oh, 1 to 4 units. Yeah, there are some differences. I think, you want to get someone that has experience in apartment buildings, renovating apartment buildings, because the mechanicals are slightly different, especially plumbing, the HVAC system, or maybe it's not even HVAC, it could be a boiler system. So the mechanicals are slightly different. Some of them vary. The renovations itself of kitchens and tiles and floors, that, I think anyone who does that kind of work can probably do it here. But I think your mechanicals, you want to get someone who's experienced in that regard.
Absolutely. So do you guys do the whole cash for keys things where you pay tenants to leave, or are you doing renovations as units turnover organically? In these buildings that, as Mike mentioned, are running negative cash flow, we're trying to turn over tenants as quickly as possible. Again, this is the human element of what we're doing, right? I mean, these are people's homes. We're having a conversation with them. We let them know what's going, like, for example, in the building that I'm standing in now, which is 18 units, we're converting to 22. I think there's 9 units here under construction, maybe 10.
And so we let people know, like, listen, we're about to go through a major rush of renovation. It's going to be dusty. It's going to be messy. You know, if you want to move, we'll help you financially. We'll find a place for you. We will do cash for keys. Every person is different. Every situation is different. So that's the human element of kind of this business, is understanding what their needs are, what their timeframes are they family, where they want to go. A lot of times you'll find, especially because of the buildings that we're buying, they're pretty dilapidated. You know, oh yeah, we were thinking about it. We were kind of looking at it, but they were thinking about it for 2 years. Sometimes just our conversations like, okay, now I'm ready to go. So yeah, there is a mix of that, and it's not, I would say it's not scientific. It's definitely art and science. It's tenant by tenant, building by building basis.
Gotcha. Awesome. Okay, so someone asked, how long does a property need to be held to avoid income tax for the capital improvements made? I don't know about you guys. My take on that is that's the type of question that you want to make sure you ask an accountant. And last time I checked, none of the, are you guys accountants and I don't know about it?
Nope.
No. So that's definitely one of those questions. It's 100% worth your while to, you know, start a list of questions to ask a potential accountant, book some time with a high quality accountant and ask your questions like that. A lot of times in the world of real estate, I find the answer is it depends. And when we ask for questions, you know, on a Facebook forum, sometimes when you ask for free answers, the advice you get isn't that great. So that would be a question. Anonymous attendee, please, by all means, you know, reach out to a fantastic accountant. And if you're wondering who a good one is, you're welcome to message any of the three of us, and we're happy to share our network. Okay, so what is your cutoff grade for the ROI below which you will not do the deal? So what is your minimum ROI to be interested in doing a deal? My personal one, I want to see at least 15%. Especially if I'm going to have partners, it has to be higher than that. I'm looking minimum 20, 25, even 30 if I can find it, if I've got JVs, but my minimum for me is 15%. What about you guys?
I would say we're closer to 25-ish. We just find different ways to, you know, finance them differently, refi them out. But yeah, I would say about 25. Anything under that, we're probably going to pass on. So yeah, that would be our minimum.
And I think that's in terms of process, like we'll, you know, analyze. So Excel kind of, you know, analyze the deal. If it's going to do 20 to 25 on paper, maybe 25 on paper, then it's like, okay, let's go look at it now. Let's kind of go further in the process. And then, you know, we hope to get 25 to 30, especially if we do have partners, so that we're giving our partners kind of in the 15 kind of range, 12 to 15 range. And so, yeah. So, but again, it's deal by deal basis, right? The longer you hold it, the better it looks.
I want to touch base one more thing if we have another minute or so, but we're looking at turnover. We're buying value add buildings. So when you're buying a 20 unit building in 5 years, how many units are you turning over, right? So we do, based off of what we were talking about earlier, we look at the tenant profile prior to purchasing the building and kind of gauge, okay, we can probably turn X amount. There's younger couples that are probably going to end up, you know, moving on or moving out at some point. So sometimes it's being more aggressive. If we were to give more cash for keys, could we get 15 units turned, not 13 units? And how does that affect the ROI if we become more aggressive? But yeah, I mean, it's just kind of adjusting in the pro forma, seeing what we think we can do and testing our hypothesis, right? And even rental amounts, we put $1,500, we go walk through the unit, say, wow, this is nice open concept. Maybe we can get 1625. And now that changes the ROI. So there's a few things we look at, but yeah, back to the end result being about 25%.
Awesome. Okay, good to know. So I'm just looking here because Nav Kumar has been like your biggest fan, and there's like 6 questions here from Nav. So I'm just gonna give other people a chance, and then we'll circle back. So Jenny Lynn asked a question: whose responsibility is it to find skilled tradespeople, contractors, your property manager? So I guess she's going back to the question of who's responsible for what, and who, you know, hires the contractors in the market and in the area.
So the Contractors, again, we have a relationship with a company, you know, a personal friend of Mike as well for many years, who's actually calling me right now. They arrange all the construction and contracting.
Gotcha.
Like a handyman and kind of, you know, stuff. You know, Mike and I will find someone in the market. The property manager that's kind of in Barrie will do that. That'll be the responsibility of the person that we bring in, is to kind of find the right people. And we have a list of people that work with. Also, coming from the flip business, I have a good Rolodex of contractors of all sorts. So, you know, that's kind of just provide over the Rolodex and, you know, give access to those contacts.
That's awesome. Yeah, your experience definitely would be a tremendous asset in doing what you guys are doing now, for sure.
Yeah.
And that's the thing I think a lot of investors, especially new ones, forget, is that, you know, you might be new to the world of real estate, but chances are you have half a page worth of skills that are highly transferable. So you're not starting out green like it's your first job outside of high school. You know, you have transferable skills, and the question is, how do you maximize or leverage those to your best advantage to find opportunities? Okay, so Lucy was asking, no conditions in the offer, no environmental assessment, fire inspection, etc. Nothing?
Yeah, no, definitely. You're going to need all this stuff. I'm speaking for sometimes when a reputable broker puts out a package and all that stuff's already been completed. Like the building that we're closing on next week, we had a package with an environmental. It had a BCA, building condition assessment. It was a year or two old. We had to get another one, but there was nothing major in there. We didn't see any major from, you know, what their building condition assessment said to what we could see. So a lot of that stuff was done for us. So it was only really financing that we didn't know where we would land exactly, right? So there was no real reason. And sometimes you get a lot of these brokers sending out, you know, data room links, share file rooms and stuff like that, and everything's populated in there.
So I would say, to add on to that, is if that stuff isn't provided, then definitely don't, you know, we're not saying go firm and go with unconditions, because I think that, but we're not saying that. Is if you have all this already provided, and some you know, sellers and brokers will and some won't. If you don't, I think in a situation where they don't have it and they say, oh, come in firm, I would definitely not do that. Like that would be irresponsible and very high risk. I think extremely high risk.
Yeah.
And any reasonable seller or broker representing a seller would know that you have to get a phase one, and because the banks are going to need it anyways. Like, you know, majority of banks, RBC sometimes no, but most of them will. So I think, yeah, it's just, if they provide it, then yeah, you have all the information to make the decision you have to make.
Absolutely. Okay, so that gives us the opportunity. I think Alex's question would fit well here. Where do you see the interest rate direction from Bank of Canada going in the future? And how do interest rate changes affect investors versus someone who's only buying one or two homes for personal residence? So we all know the stress test has been brought in, or has been increased again at the beginning of June for everyone. So that will have an impact, obviously, on the residential market, at least for a few months, as it typically does, because it, you know, real estate is supply and demand. So when the demand drops because there's less qualified buyers, obviously that gives you a little more supply, a little more breathing room. How do you foresee interest rate changes affecting or impacting the multi-unit space? Or does paying 1% or 2% or 3% not really make much of a difference for you?
So they're going up. There's only one way to go, I think, from here. So plan on them going up. I think you just have to, you know, because these are longer term investments, and if you're modeling for 5, 7, 10 years or whatever it may be, model that interest rates will go up. So you just, you know, it's going to have an impact on your cash flow. You know, principal pay down, perhaps your ROI, depending on how high it goes up. Is it going to, I mean, you know, one of those debates that Mike and I have, you know, as well as some of our other partners, is the increase in interest rates going to have an impact in cap rates? So are cap rates going to go up? So if cap rates go up, then property values, so it becomes cheaper to buy multifamily. I don't think that's going to happen. I think, again, it's a supply and demand. There's way too much demand for these types of assets. and there's capital flooding in still, and there will continue to be as immigration opens up. So I don't foresee cap rates going up or even stabilizing for a very long time. I think the long-term trend is that cap rates will continue to compress, which means that the values of these properties will continue to go up.
Absolutely. Yeah, I think, Mike, did you want to add anything, or are you good with that?
No, I think that's pretty much the whole synopsis of what will happen. I mean, will it affect it? Maybe slightly, but you're talking, instead of it going up 10% a year, it's going to go up 7.5% a year. It's not like house prices and multifamily apartment buildings are going to, have a huge impact and slump and lose 10% of value. I definitely can't see that happening personally.
Absolutely. Okay, good. So 2 more questions. First one we'll ask Mark, and then the last one will be for Mike. So Mark, who are the top lenders that are multifamily friendly and understand your strategy? You guys have sort of mentioned them earlier, that it's important to work with the right lenders. So can you share any names that would be helpful for other investors?
Sure. Yeah, we work a lot with First National, so they do a lot of our deals. So they understand the strategy. I think they're probably one of the largest multifamily commercial lenders in the country. I think they do, I forget the stat, maybe 33% of all apartment building financing is done through them. So that's one. And then Harbor Mortgages does a lot of our stuff in the GTA. They're kind of more on so we use them to buy the buildings for really undervalued. Doesn't make sense to go to kind of a lender like First National. We'll use kind of a private, like a Harbor Mortgage. They totally understand the strategy. They have really good financing terms, and they finance sometimes our construction, right? So those are the ones those are our go-tos right now. And we've used others before. We've used Home Trust. Mike, I know you've used RBC.
There's People's Trust. A lot of investors use Laurentian Bank, CMLS. They're primarily focused in multifamily.
It sounds like a lot of these are broker channel as opposed to going direct to a bank. So I'm assuming you have a commercial mortgage broker you work with who helps you place all the deals? No,
they're actually like boutique banks, I guess I would call them, B lenders. CMLS would be directly to the bank. People's Trust I haven't used, but I'm pretty sure that's like a pretty decent sized lender in the multifamily space. So that's you can go straight to People's Trust without a broker.
Interesting. Okay, good to know. Thank you. And the last question, this one for Mike, is it good to be a realtor in this business, or it doesn't matter?
It's actually good. It's actually really good. And the reason I'm going to say that is because I start leveraging relationships through clients. And when something does come up, I'm not having to have the sellers pay a broker. So for example, I'm now hearing about deals because of another deal that I happen to do through another broker. If I didn't, it would have maybe been my realtor who heard about that deal, meaning the seller has to now pay his commission. So even the deal we're closing next week, there was agents bringing deals for their clients, meaning the seller had to pay an additional commission out, which in our case, they didn't. We didn't take a fee. So because I'm an investor as well, I'm able to leverage that. If
Absolutely.
that makes sense. So,
yeah, so it saves them, tens of thousands of dollars, which is amazing.
It doesn't necessarily save it. We might be paying just as much as they are. Just the seller's now saving that tens of thousands of dollars by not paying out a realtor. Just we're actually getting the building now instead of somebody else, because the seller will net more. So it's not necessarily that we're saving, but that's how we're landing buildings, because the seller nets more money.
Yeah, absolutely, which is amazing. Okay. You guys have been awesome. So one final question for you before we wrap up. What is your long-term plan or exit strategy? Like, are you guys gonna, amass this network or this portfolio of multi-unit buildings and then just kind of sit on them for 30 years? Or like, what are you anticipating happening in the future?
So, I mean, what we've been buying to date have been, I guess, wealth builders, meaning a lot of equity, like the cash flow, as Mike said, non-existent in the beginning, right? So these are kind of more equity building plays. So we'll continue to buy those. but we are adjusting the strategy a little bit, and not just, in fact, the deal we're closing on next week is an indication of this, is that we're not just going to buy value adds all the time. One, because they're just really expensive, and but look at buildings that are income producing right away. And what that will do is it will allow us to, one, bring more revenue into the company, more doors into the company, which will feed property management and feed some of the other services, so that it becomes a much more income generating business versus an equity building business.
Awesome. Love that.
I would love to keep all of them till I'm 75. But the reality is you have partners, things change, plan for, shorter time periods. But I mean, if possible, I would probably keep all of them.
That's absolutely. And do you intend to keep refinancing them over time, pulling money out and buying more? Or are you of the school of thought that some of them you want to pay down to zero in terms of a mortgage?
I think there's going to be a mix, right? You want to recycle. I can't see myself in 15 years saying, I'm done. I'm keeping my portfolio the same size that it is. I'll probably end up refining some, buying more, and some others, just keep them, pay them down, collect the cash flow, and see where it takes me from there, right?
Absolutely. It has been such an absolute pleasure, because I know I've been on your podcast. Gosh, it's got to be, what, a year ago? More than?
Probably a year. Yeah, I think it's been a year, at least over a year. Yeah.
So it's been great sort of reconnecting and finding what you guys are up to. I'm just going to do a little screen share here. And I have, where's my book here? There we go. So a friend of mine, Quentin D'Souza, wrote a great book for helping real estate investors get started. So the Action Takers Real Estate Investing Planner, I give one away at the end of every webinar. So Mark, give me a number between 1 and 58, and entrant number or webinar attendee of that number will be contacted by my VA, Mary Beth, and we will ship them a copy of the Real Estate Investing Planner.
I'm gonna have to go kind of Toronto Maple Leaf style, Austin Matthews, number 34.
34. Okay, love it. Pretty much halfway to. That's awesome.
Yeah.
So here is where you can find us if you want to reach out and connect with us. Mark and Mike, obviously, you guys have a phenomenal podcast. So what is the official name of your podcast? The Multifamily Investing?
Yeah, the Canadian Multifamily Investing Podcast. And then your episodes there, we just talked to Quentin as well. So that will be coming out in a couple of weeks. So
ooh, that's a good one. I'm excited to hear that one too. That's awesome. So here are our email addresses. You guys both have websites. I typically love to hang out on Facebook. That's where I can be found. Thank you so much, guys. And thank you very much to everyone who attended. Absolutely love doing these. Really appreciate you, giving up your lunch hour and joining us. Hopefully you found this last hour and a half of information to be valuable. Mark, Mike, such a pleasure to connect with you guys. I really wish you all the best in the future, and go slay it in the world of multifamily buildings.
Thanks. Real pleasure. Thanks for having us. This is great. Time flies, actually.
It does, doesn't it? Especially when you get like all the questions.
Great questions. Yeah, great questions. Awesome.
Yeah. Well, thank you again, guys. Thank you everyone for attending. Enjoy the rest of your week, and happy investing. Stay tuned. Oh, my next webinar is coming up in early June, and we'll make sure in the show notes that we put information on that webinar who my guest is and what the topics are. So take care, guys. See y'all soon.
Thank you. Have a great day. Thanks,
Thank
Elizabeth.
you. Bye-bye.